banks. And I think, to me, that is the reason for the ban on interest in Jewish teaching. But to me, it's not an absolute ban. Secondly, so I would then go on to say there are benefits to credit markets. You looked on a lot of the downside, but what are the benefits? Well, you can borrow if you're a family in difficulty, if you're a company in difficulty, if you're a government in difficulty. You can rearrange, in technical economic terms, your pattern of consumption over your lifetime. So typically what you do is when you're young, you borrow, you take a house and so on, and it means you can even out your income stream throughout the whole of your life. And thirdly, obviously one can finance investment spending for growth. So I would say the case for the kind of monetary system which is developed is, if you look today at major transactions on the capital markets for developing countries or for projects in developing countries, then it's basically related to growth. Secondly, I have to go on very quickly. Secondly, interest is usury. The original meaning of usury was a use charge. It applied to any charge for the use of property. I think today, when we think of interest and usury, interest we think of as competitive markets. We think of basically made up of three things: a real rate of interest, which reflects the fact that money is more valuable today than tomorrow, and that if I invest the money I can get a return at what technically economists call time preference in the productivity of capital. There's an inflationary element and there's a risk premium element. Usury, on the other hand, has got an element of monopoly about it. It's an exorbitant interest rate. And examples of usury, if there was one example in the UK which we came across in this commission, if anyone wants to read this, by the way, I can send you a copy if you give me your address. For example, I remember going around an estate, a really bad estate in Liverpool, housing estate, where a lot of the buildings to start with were just boarded up. It was rife with drugs. It had endless loan sharks, doorstep lending and so on. And debt on the doorstep suggests that the average interest rate charged is 177%. That, in my book, is usury. Paul Jones, professor in the University of Liverpool, he found, looking at the community bureaus, that rates of 164 to 903. So I think there's a great difference to me between usury and interest, and I would want to condemn usury and say whenever we see usury, we should be trying to do something about it, because people are really suffering because of it. Thirdly, there's the idea that debt is slavery. The rich rule over the poor, the borrower is servant of the lender, is one of the proverbs. I've got two examples in my slides here. One is low-income families in the UK. Typically, 3 million adults don't have a bank account. They typically tend to receive welfare benefits, live in socially rented accommodation, and be lone parents. They have very little savings. The Treasury estimates that 3 million people need access to credit markets as well. What kind of credit markets do they go to? The most likely regulated and the ones in which usury is most likely. If you look at low-income countries, then we know the situation. You've mentioned it yourself and so on. I didn't go through it again here, but the evidence is on the board. Fourth charge, credit markets lack transparency. Some are totally transparent. The market for government bonds, for example, is a totally transparent market. Others are not. And what we found in this report was, I'm in banking, I feel quite angry at banking because it seems to me that the branches of our high street banks today have become money shops where people are selling money and are incentivized to sell it in their compensation, and frankly, they don't take due care in asking, can the people really repay it? And I think that that is a great tragedy. And then you look at personal unsecured markets, and I've listed there a number of things where, frankly, it's translucent. You don't really know what's going on, and suddenly, you get a bill, and you didn't realize, my goodness, that's the amount that they're really charging. And then finally, the poor suffer most. 3 times in the Hebrew law, the ban on it, and it's only quoted 3 times, the ban on the charge of interest. Twice it's quoted in connection with the poor. We have debt for poor countries. We have inadequate markets. What therefore should public policy be for the credit markets? I believe the goal should be for all markets to be competitive, to be transparent, and to be accessible. Secondly, I think we need in Britain today, domestically, certain reforms to achieve this, which is what we dealt with in this. I don't believe, for example, that the voluntary banking code is adequate. I think you need something much tougher, having the law behind it. I think you need compulsory data sharing. You need increased transparency in the subprime markets. That would be my way of going about it, rather than putting a ban on interest. Thirdly, I think the community finance initiatives which we are seeing, credit unions, money lines, community banking partnerships, I think they should be encouraged. And I think the Chancellor should be putting aside a small amount of money, no more than say 25 million or something like that, and saying, in poor areas, what do we have to do? At present, no credit union, no money line, no community banking partnership is a viable business model. But in other countries, you look in Ireland, you look in America, you look in Australia, you find credit unions are viable. What would it take in Britain to make them viable? That, to me, is the way I would tackle the issue of justice. Thirdly, I think that, or fourthly rather, aid to poor countries should be in grants and not loans. And finally, I would simply write off the whole of debt. I think actually that the HIPC initiative is actually quite disgraceful. For this reason, that the World Bank, the IMF, plus individual governments are keeping lending to countries which have no way of paying them. They're absolutely bust in terms of the loans. Why don't we just write them all off? Absolutely write them all off, because actually what we're doing at present is really wicked. We are creating jobs for middle-class people in Western countries at the expense of these countries. I remember once having a debate in 1979, just before Mrs. Thatcher was elected Prime Minister, with the man in the Treasury who was in charge, just 1 minute, who was in charge of exchange control. And in the city, there's a huge building which was exchange control. I said it'd be far better if this building was turned over to an ice cream factory, because it would be producing something real. And finally, a quote which came out yesterday from the chairman of the Joint Economic Committee of Congress, saying, as I've said since 1970, the IMF and other IFIs, international financial institutions, should simply cancel 100% of the worthless debts owed them by poor countries. Their loans were based on mistaken policies that are now discredited, etc. Can I say, I'm really looking forward to the discussion.
Brian, quite a lot of the cases, why don't you take a microphone each and I'll hover around here so we don't have to share. Quite a lot of your cases based on there being a reasonable distinction between usury and interest, that there's interest and there's usury. How do you draw a line between that? What's, 28% usury or interest?
Well, if I can take out a mortgage on a house for, say, 12%, and I'm paying 177% if I'm dealing with doorstep lending in the Provi, I think there's a difference.
But the moral line is going to be a fuzzy one, and perhaps even more fuzzy than some of the other moral issues that we've...
I think it's to do there with the numbers.
So you can't...
I'd rest my case on the numbers rather than on anything else.
Well, as far as I can see, we have agreement on the fact that the current system isn't perfect, and we have a disagreement on whether the whole system is completely beyond repair and needs rethinking, or whether judicious use of proper regulation, promotion of the right kinds of institutions, debt forgiveness of the right style, we can make the current system work. Tarek, let me just ask you if you want to comment on anything that Brian said before we open to the floor.
On the interest usury issue, the best study on this is John Noonan's study, which he did as a PhD thesis in 1957. It's a staunch Catholic, I think you must know. I think it's on the Supreme Court now. I think so. And he did a lot of research on the Christian prohibition of usury and how it was overturned by the commercial classes. And what happened is that for 1,000 years or so, that usury was prohibited and you couldn't obtain any benefit on a loan, no matter how big or small. And that would be seen as usury. But then there was a writer called Hispanus in the middle of the 13th century in Rome who said, well, no, there's this thing called interessa, and you're allowed to charge interessa if someone is late in repaying a usury-free loan. So you couldn't lend at usury, but after the repayment date, in between that and the date on which the guy actually repaid, this was the period in between. That in between is that interessa. And so you could charge a penalty for the period that was interessa. And that's where the word interest came into circulation. King Henry VIII approved it up to the threshold of 10%, and anything above 10% was usury.
Oh, he had 10%. So
I think
he was clearer than Lord Griffith.
Well, yeah. Well, then you had actually Parliament to change the threshold. I mean, the Bank of England needed to conduct monetary policy for the ages, and Parliament would often have to pass a law saying, no, usury is now 8%, not 6%, so the Bank of England would put up the interest rate. I think that's...
Let's open it to the floor. Shana, we're going to get people, are they going to come to the mic or are there roving mics?
We've got roving mics? Yeah, we've got roving mics. We've got a roving mic, yeah.
Is this the roving mic? Is this
Can we not use one of those?
Well, at the moment they're shared. I'll tell you what, I'll go share.
You can share if you want this.
Why don't we just...
It's audible, I think people can just stand up.
Maybe people can just stand up. Maybe just people stand up. Any questions, comments? Just like you to say who you are, and then we'll put it to the panel. Who wants to start us? We've got one at the back, sir. Yes. Stand up and project. Tell us who you are. And
yeah, Mike Yassin from Global Vision 2000. I read a statement by Ben Ligier, the inventor of the euro, and he stated that within the next 5 to 10 years, there's a 50% of a global economic meltdown. Now, in the next few weeks in London, there are 2 Muslim initiatives looking at not the problem, the solution. One is focusing on barter and the money supply, control of the money supply, and clearing, alternatives to the monopoly of the banks and clearing. And the other is on the gold dinar. I'd like to ask the people in the panel what their views are on both of these solutions. The dinar, which is advocated by certain groups who've done an analysis of the capital system, and barter, and ending the monopoly of clearing by the banks.
can you just tell us what the dinar one first is?
I'm not advocating the dinar, but there is a movement advocating it, and there's going to be a conference on it.
It refers to the old Islamic gold coin, which weighed around 4 grams from a quarter, sometimes a bit more, sometimes a bit less. The dirham is the silver coin, which weighed about 4 grams. They were typically the currency for many centuries. And people are saying we should go back to a commodity currency. I'm in favour of that myself. I'm not saying that we should enforce gold and silver as currency. I'm saying that we should give freedom to the people to use what currency they like, and it should be used at factor cost.
Yeah, I mean,
There's a couple of points.
there's a gap. There's something between barter and
Well, I mean, we had barter for a long time, and we still do in many economies, and it works, and it's not prohibited. In Islam, you're allowed to trade goods for goods. But the point is that if barter is operating in a bubble, and you have the overwhelming, let's say, environment, which is the current paradigm, then the barter won't succeed. The people won't get out of their debt. They'll still be living in a bubble, and that has its...
seems awfully inconvenient. I think we could give a more robust answer against barter. It just seems like an awful lot of trouble to find somebody who's
double coincidence and once, yes.
But
it's not prohibited, you see, and if it's permitted, then that's fine. There's a barter card idea that the Australians have developed, where people have credits of money, but they don't actually pay the money. They have a credit on a debit on an account, and there's no interest charged on. Very good. I can't see anything un-Islamic about that. But if you ask me for the Muslim position, then it's not prohibited. So I've got nothing to say. I would say that the real problem is within the overarching monetary environment.
Well, just on the barter thing, I would have thought that if you look at the history of money, the reason that we use money rather than barter is that it's just much more convenient. The transaction cost of using money is so much less. I'm just wondering how I'd start bartering. If my wife asks me to buy her a dress or something, and we go down Oxford Street, you know, and I want tickets for the rugby of England playing Wales or something. I mean, how do I start bartering these things? I mean, it would be just so complex, I think. So I would say the evolution of money has happened, actually, because barter is complex. And indeed, in Britain today, there's nobody to stop you bartering. I mean, if you want to barter, you can barter to your heart's content. It's a free society. You know, please barter. So, I mean, to me, that is not, I don't think, it's, you know, it's very interesting, because I was a professor of money and banking, and I have to tell you, this is a very exotic field. And I've never known a field in which people do have very sort of exotic ideas. And I think also, I have to say one thing in relation to the gold standard. You know, what really is something we shouldn't underestimate is how successful our global capital markets have been in the last 25, 30, 40 years in dealing with huge external shocks. I mean, if you just think of the world, say at 9/11, I remember watching 9/11 thinking, what is happening? You know, I thought the world was coming to an end as I watched it on television. And yet, if you think of the way the markets dealt with that, even the way the markets in the 70s dealt with the oil price rise, the problem I would have with going back to, I mean, I don't have any fundamental principle, fundamental objection to the gold standard. But the problem, when the gold standard was in operation, I mean, you do have problems like, what if you suddenly discover a lot more gold, and gold price is moving around and so on? And, you know, I think that is a problem. Whereas I think that, say, the Bank of England, Federal Reserve, European Central Bank, I mean, we have devised fairly sophisticated ways to try and control the money. And inflation in the US, in Europe, you know, it's reasonably held down. We have reasonable stability. So I'm not sure at this moment what moving to a gold standard, what exactly the advantage would be.
Can I comment on that? Just one?
Quick comment and then we'll go back to the floor.
This idea that inflation is low in the United Kingdom, for example, the United States, the biggest item most people ever buy is a house, and how anybody can say inflation is low when house prices have been going up 20% per year, it's just a statistical massage to make us think inflation is low, and when we get to the pay bargaining table, we can't say, oh look, inflation is 20%, because house prices are not included in inflation figures. And so I really don't agree at all with the inflation argument. I mean, we've chosen a subset of consumer goods that we put in the index, and we exclude houses and shares and all other kinds of things. But the point in terms of using gold as currency, if you look at the long term, and you see that 1400 years ago, you could buy a sheep for one gold coin weighing 4 grams. Well, 4 grams of gold is today worth around 30 pounds. And today a sheep can cost you 30 quid, or if you're lucky, you can get one for 20 quid. But basically, a unit of gold has held its purchasing power over 1400 years since the time of the Prophet Muhammad, peace be upon him, better than any paper money or token money system has held its value. So, you know, if we ask what kind of money do we want, and we say we want a money that holds its value, for example, then I think gold and commodities generally tend to hold their money better.
More from the floor. We'll take gentlemen here, and then we'll take the gentleman in the back in the brown t-shirt. First, yes, first.
Lord Griffiths
Just
referred...
tell us who you are and... So
Rodney Shakespeare. Lord Griffiths referred to governments getting into trouble and borrowing from the banking system to get out of that trouble. And there's a course of governments borrowing for their capital expenditure. And I asked Lord Griffiths, why should a government borrow at interest for its own capital expenditure when it could create that money interest-free and take it back and cancel it?
Cool. Well, I mean, it could do it, and of course, governments have done it through a wonderful mechanism called inflation. You just print more money, and you effectively impose a tax on people like that. I think the case for making governments borrow for their investment is that everybody else who borrows for an investment has to convince themselves, or their shareholders, or whoever, family trust or something, that the investment yields a certain rate of return. And you can raise money because, you know, you can convince yourself, maybe convince the rest of the world, that you do have a positive return here. And I think that the government should be in exactly the same position as everybody else. That if the government is borrowing, for example, to build new schools because there's a social rate of return on education, fine. If the government is borrowing to build better roads, for example, you know, or better railways, fine. But it seems to me for the government to borrow in the way you suggest, which would really be at zero interest, that seems to me to be, they're putting themselves in a quite different position to everybody else.
Yes, that was the point. Thank you.
You believe in that, Evan?
No,
can see.
I think sometimes money makes everything extremely confusing and complicated. And I genuinely don't think I understand money. And sometimes it's easier to say, just imagine a world without money, but where all the things that money does could happen. And essentially what is happening in the case of government wanting to build a road, whether they borrow it or they print it, they actually have to get somebody to build the road who would otherwise be doing something
I
different.
didn't say print it. The banking system creates the money and it takes it back and cancels it. And everyone uses this word printing. I wasn't proposing printing of debt-free money. I was proposing the creation of an interest-free money. In other words, money which is created, goes back, taken back and is cancelled. Just as when the bank creates money, you pay it back and the debt is cancelled. Lord Griffiths used the word printing money. I didn't actually use that.
Can I just say, I mean, one thing the government does do, of course, is that in a fractional reserve banking system such as we have, deposits held by the banks at the Bank of England don't earn interest. And that is equivalent to really what you're saying.
I think he's asking something different here. The point is that the government has a choice. It can say, either we will borrow 100 million from the banking system and pay 10% interest, or we can create 100 million ourselves. Now, if they borrow from the banks, the banking system will create the 100 million and it will charge interest. If it creates it itself, then the government need not pay interest. So it seems to be a win-win scenario for the government to say, either way, 100 million is going to be created, but if we borrow from the banks, we'll pay interest.
This is a factual question.
That's
I'd like
my
to hear
point.
your response.
Can I just say-
That was your point, yeah.
Can I just say, to take the point you made, Evan, if the government, let's say, wants to build a new road, basically what the government has to do is it has to get the resources of builders and aggregate materials and everything else, of people who would be doing other things and say, we want you to build roads. There's three ways it can do it. It can either increase taxes and use the tax receipts to pay those people. Secondly, it could print money and create inflation, and inflation is just a tax. Or thirdly, it could go onto the open market and borrow money, where it's competing on a level playing field with the private sector. And I would frankly, of those, we need certain tax levels, but I would prefer, I'd certainly prefer interest to inflation. And because it seems to me it's more equitable.
Why is it the case that by the government creating 100 million there will be inflation, and the banking system creating 100 million there won't be inflation?
Because if the government is controlling the money supply and is saying we're going to have a non-inflationary policy, then if the government is taking more from the credit market, somebody else has to be taking less from the credit market. How does the government do that? The government says we'll raise the price we're prepared to pay for the credit, namely the rate of interest. And that is a non-inflationary way of financing the road builder.
But there is nobody who loses out in this case. 100 million is going to be created from somewhere. The question is, where
no,
from?
there is somebody who loses out. If I was a potential borrower from the bank and I now face higher interest rates, I say to myself, okay, I can't borrow now, then because effectively the government has crowded me out of the credit market.
If the government borrowed it through the post office to be national savings, it wouldn't be creating money, would it? It wouldn't be like the bank system creating a loan for the government. It would be So not all government borrowing has to be green.
No, you're right, it doesn't. You see, there's this issue of borrowing existing money and borrowing newly created money.
Yeah.
The point is that there is no crowding out. If the money is going to be created from somewhere, nobody is going to be crowded out of the debt market. The difference only will be
To me, that is not,
the banks will charge interest on a loan.
frankly, an interesting question. and that's not because I don't want to answer it. But it's that I think that in the whole issue of credit and so on, there are real issues to be addressed. There's the issue of exploitation, there's the issue of what we do in people excluded from the markets and so on. That to me is the real issue, rather than the issue of can the government somehow...
But the question in a way is, have the bankers got a route in which they create money and earn interest on the money they create? Now, clearly the Bank of England does have that right.
The Bank of England,
because the Bank of England print notes, it does print notes, and it lends at interest, so it gets seniorage, and it's a familiar thing, and it's worth about a few £billion a year in our economy.
And they also get, by asking the banks to hold deposits at the Bank of England...
That's the same. They've got powers to extort money out of the sector.
Right.
Not using the word extort in a loaded way. They can just say to the bank, give us the money, and the banks have to do that. Does Barclays have the power, as Tariq has suggested, to print money, earn interest on it, without having a corresponding liability on which it is paying interest?
I don't think so. I mean, I can see no way that Barclays can somehow just create money like that and somehow make money out of creating money as if it were the central bank printing money. I think because they're paying interest on deposits. On the deposits.
Now that's the point, Tariq, I want you to answer, because Barclays have a balance sheet.
Yeah.
And the balance sheet, the two-sided balance, the credits and the assets and the liabilities, by and large, they're getting interest on the assets, but by and large, they're paying interest on the liabilities. And of course, there's a better rate on the one side than the other, so they're coining it in, but it doesn't seem quite such a magic ruse as the Bank of England's ruse,
No, it doesn't.
which is to print the money and not have any liability effectively other than the bill to the printer.
Yes, you're right. It doesn't seem so clear, and that's why society hasn't noticed it for 150 years, because it's quite complex. If you look at Barclays' balance sheet on its own, then you cannot see the money creation happening. If you look at the banking system and you say all the banks are one bank, then it does work as I've showed. If you look at Barclays on its own, then you have to take a more complex analysis and say, okay, someone comes with £100 to Barclays, puts it in Barclays Bank, £100 of state money, the cash which the central bank has printed, yeah, puts it in Barclays. Barclays then works on what a 4% reserve ratio, so it lends £2,500 as interest as a result of that £100 deposit. That £2,500 is deposited in HSBC.
Yeah.
Okay, HSBC holds a 4% reserve and then lends 2,300 something to another person who goes and deposits it in NatWest, who now have 2,300 something, take 4% reserve for himself and lender, and it goes through the system like this.
Right.
But each balance sheet balances because you have loan plus deposit taken.
But the banking system's balance sheet was balanced as well.
Well, it does, but you know, the point is that the banking system's balance sheet is balanced, just as when I created that £100 in the example I showed, my balance sheet balanced as a bank.
Okay, now, last...
But can I
Brian,
just say,
go.
let's now consolidate all the balance sheets of the banks, including the central bank, the Bank of England. The assets, the loans, by and large, cancel out the deposits. So what is ultimately left is the balance sheet of the Bank of England to the banking system, plus the liabilities, which are technically, I think, the liabilities of the Treasury, which are the note issue and the coin issue. I'm sorry, the notes of the Bank of England, the coins of the Treasury. So that I mean, if you aggregate everything out at the end, you are left with, yes, the central bank, the government, state-sponsored money. There is state-sponsored money in our system.
We all agree with that. We all know that.
But as a percentage of the balance sheet of banks, it's, I wouldn't say it's trivial, but it's very, very small.
But okay, effectively, and I don't want us to get bogged down in this, because I'd like us to have some moral discussion as well. But the essence is, you believe it washes out when you consolidate the whole banking system together, and Tarek, you don't believe it all washes out, and there is a ruse there somewhere, and we haven't got one.
No, can I say I'm with Tarek? There is a ruse, but the ruse is pretty small.
Okay, well,
That's why I said it's not an interesting question.
Okay.
But
Well, the ruse isn't small. The Bank of England's own figures say that sight deposits in this country are £535 billion as of Q2 last year. And at that time, the state had created £41 billion, according to the Bank of England's own figures.
But your ruse was the state bit, not the whole.
yeah, that's right.
So it's the 41
Because
billion.
there are assets against the sight deposit.
Yeah, but that's not complicated.
Okay, this is one for afterwards, I think. I promised the guy in the brown t-shirt, Bryce is standing up the back, the next one, yes, go ahead.
Just a question to Tarek is, if the system of or the interest-based economy system is detrimental to society as a whole, then why is it that in general we see that while borrowing has been increasing over previous decades, that actually the standard of living in this country and in most Western countries probably actually increased? Is it because they're living off, or is it at the expense of the third world, or I don't understand how that is?
The question, of course, is that can you have any control mechanism to compare with? Where would we be if we didn't have an interest-based system? If we had a system which is based on, let's say, prohibitions that the creator has given to us, something which I would be content with, what would be the result there? And if we don't have the control to make the test against, so we can't actually make absolute statements. But I would say that, for example, in your own Commission on Debt, you found that 3 million people are in serious difficulty with debt. Another 12 million people have occasional difficulties with debt. 12, okay, minus the 3. So we are in a situation where debt is obviously affecting many people's lives. And the problem is that this kind of stress, and it is a very great stress, and people who are in severe debt here know what it's like. This kind of stress isn't measured by GDP figures. So when you come across and say, well, look, GDP's been growing and everything's fine, what about the debt stress? What about the pollution? What about family breakdown? What about the theft? What about materialism, which is affecting many people in a terrible way? Those things aren't included. So I do accept that we are at the moment taking $700 million a day from the developing world in debt repayment. Now, that's a big bonus for our economies. But this is colonialism. It's been going on for millennia, and that obviously has an effect as well. So,
Brian, you were nodding in agreement with most of that. Can I assume that you simply believe there can be lots of things wrong with the current system without it being necessarily a moral issue in the current system, or at least not a moral issue that brings into question the morality of the existence of the system?
That's, I think in relation to the question, which is a very interesting question, I would say that, to me, the whole monetary thing, in terms of growth, I would see money more as a veil. And the source of growth being, for example, the skills of people in this country, capital investment that we have, kind of quality of the capital stock we have, and so on. Those sort of things. At the same time, I think that Tarek in his answer raises a very important issue, which is, given that you can have different kinds of capitalist systems, and you can have capitalist systems with different kinds of culture. And I think one of the really interesting questions today is what, in a way, is the heart and soul of our culture. And have we become a totally materialist society? And when you see people, struggling with debt, and I once got myself into difficulties with debt, which is maybe partly one reason why I was interested in doing the commission. And a friend of mine, a man much older than me, died. He got cancer because of